the central banks are continuing to buy. Basically, physical gold is bid only. Not only the central banks, but also sovereign wealth funds in Asia and all the rest of it. And also quite a lot of the super rich in Asia are accumulating gold. And this is in sharp contrast to the West, where we just sort of shrug our shoulders and say, well, why are they doing it? We are completely clueless about what's going on in the bullion markets.
Gold has reclaimed its position as the ultimate safe asset among central banks worldwide. The surge in demand began after Russia's full-scale invasion of Ukraine in February 2022, triggering a significant and seemingly self-perpetuating increase in central bank purchases of the yellow metal. This trend has expanded far beyond nations like China and Russia, encompassing other countries seeking alternatives to the dollar-based monetary system. Central banks have been net buyers of gold for nearly 15 years, recognizing its value as a crisis hedge and a reliable reserve asset. Following a period of remarkable growth in both demand and prices, which recently surpassed the $2,700 mark, gold's popularity has been driven mainly by central bank buying and its enduring appeal as a safe haven asset for investors. However, as we move into 2025, the once heated demand for gold shows signs of moderation. Alasdair Macleod explains that gold steadily flows out of Western vaults into Eastern nations, particularly China, Russia, and India. These countries are accumulating physical gold to safeguard against the growing financial instability of mounting Western debt. He emphasizes the significant decline in gold and silver reserves within Western exchanges like COMEX, which he sees as a warning sign of an impending market crisis. The World Gold Council reports that the outlook for gold in 2025 presents a balance of challenges and opportunities. While the global economic landscape remains dynamic, the precious metal is expected to experience modest growth, reflecting a shift in market dynamics after years of exceptional performance. Macleod explains that the East sees an increasing need to protect their currencies against an inevitable crisis brewing in the West. Alasdair Macleod emphasizes that exiting the dollar doesn't mean shifting to another currency, as it remains the king rat of fiat currencies. Instead, investors are turning to gold, which he calls real money, valued in the East but often ignored in the West. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
Yeah, where is it flowing? Well, it's the old story. It's flowing from west to east, China is continuing to buy. The central banks are continuing to buy. Basically, physical gold is bid only. Not only the central banks, but also sovereign wealth funds in Asia and all the rest of it. And also quite a lot of the super rich in Asia are accumulating gold. And this is in sharp contrast to the West, where we just sort of shrug our shoulders and say, well, why are they doing it? We are completely clueless about what's going on in the bullion markets. But as far as the East is concerned, they see an increasing need to protect their currencies against an inevitable crisis in the West. And that crisis takes the form of unsustainable government debt, which is leading all G7 countries, with the exception of Germany, into a debt trap. The debt trap comes from two ways. I mean, it's not just the mounting debt. And we had extraordinary deficits for the first 2 months of the US fiscal year. I mean, $625 billion or something. I mean, it's just going up and up and up and up and up. As far as the foreigners are concerned, they see this and they see that there is absolutely no reason why they should buy US dollars and treasury debt at anything like these yields. And the problem is that if they hold off and they want even higher yields, it just makes the whole situation even worse. So what do? You get out of dollars. And to get out of dollars, I mean, you don't want to go into another currency because the dollar is the king rat of currencies, as it were. You're going to go into gold, which is real money, and they understand it's real money. And that's what we've lost sight of in the West. And this is why Western vaults are being drained, if you like, of any liquidity. Every time gold rises, there's someone in the West who thinks, I ought to take profits. At the Chinese or the Russians or whoever say, thank you very much. So that's basically what's going on.
Gold reserves serve as a cornerstone of a nation's financial stability, offering a tangible asset to underpin its currency and bolster confidence in its monetary system. These reserves are crucial in maintaining a country's financial resilience and value. According to the World Gold Council Report 2024, the United States leads the world in gold reserves, holding an impressive 8,133.5 tons. Germany, Italy, and France follow closely behind, all of which possess substantial reserves. Alasdair Macleod believes that the current trend underscores significant vulnerabilities within the Western financial system, particularly the United States' decades-long strategy to suppress gold since abandoning the gold standard in 1971. He predicts that the ongoing market squeeze will intensify, fueled by concerns that substantial portions of gold reportedly stored in locations such as Fort Knox, the New York Fed, and West Point may no longer exist. Now let's redirect our attention to a video.
Well, we've known that, or at least I've known, that China has been buying gold secretly ever since the early 1980s. The legislation which appointed the People's Bank of China as sole agent for the government in dealing in gold and silver dates from 1983. There was always this mystery that in the big bear market, which really ran from the peak in 1981 all the way through to 2002, there's an awful lot of gold seems to have disappeared because the West was selling it. I mean, a lot of the private portfolios in Switzerland were liquidating their positions. All this stuff was coming out, and at the same time, mine output was increasing. So it's something of a miracle that the price actually didn't collapse even below that sort of 250 level, which more or less marked the bottom. But the reason for that is that China was very, very quietly, taking gold when it was offered, not bidding up, but just quietly accumulating it. And I reckon, this is looking at trade flows. It looks like it was looking at, capital inflows, because, of course, all this was, again, handled by the People's Bank of China, as the sole agent for foreign currencies. All those flows, I reckon, at contemporary prices were the equivalent, 10% of them were the equivalent of about 20-odd thousand tons, 20 to 25,000 tons. So I feel fairly confident that that's the sort of number which they had accumulated before 2002, when the Shanghai Gold Exchange was set up and Chinese citizens were permitted to buy gold. Since then, Chinese citizens have accumulated a further 26,000 tons, roughly, figure like that. Now, that's not the only form of accumulation by Chinese citizens, because banks have offered gold accounts and the Chinese citizens are enormous savers. I mean, in the past, they've tended to buy property, which they haven't necessarily occupied, as, if you like, their pension investment. That has blown up. Stock market, annual savings. Savings accumulating. This is household savings accumulating at the rate of around about $2 trillion a year. So you can see that there's a huge great overhang, if you like, of potential money going into gold. Now, we've recently seen that the People's Bank of China has been reducing interest rates. And as a result of that, the returns on deposits less attractive. So I think we're seeing more and more demand, if you like, from the banks to cover their positions of unallocated accounts, if you like, or whether they're allocated, it really doesn't matter. But the Chinese banks, I think, have been covering their positions by, picking up whatever gold they can. And I suspect that some of them have been, behind a lot of the standing in for physical on COMEX and elsewhere. They got to get it from somewhere.
The United States began building substantial gold reserves in the late 19th century, strengthening its position as a global economic leader. The 1934 Gold Reserve Act transferred gold ownership to the U.S. Treasury, significantly increasing its reserves. Today, the U.S. holds the largest gold reserves globally, with 8,133.46 tons valued at $687.73 billion, representing 74.16% of its total reserves. This dominance is rooted in the nation's economic history and its key role in shaping global financial systems, with gold remaining a cornerstone of its financial stability. Do you expect gold to remain a preferred asset for investors in 2025, given global economic uncertainties? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.